All right, Sonal Verma now joins us, Chief Economist, India and Asia ex-Japan at Nomura. Sonal, afternoon. Thank you so much for joining us on the show today. She's joining us from Singapore. Sonal, there's so much happening around us right now on global macros. For any asset manager, any large corporate, one has to keep an eye out for what's happening in global macros. Let's start by understanding how Asia gets impacted by what's happening in the US economy. The jobs data last time round, last week, rattled everybody and completely changed that entire rate narrative. This time round, the jobs data was much more calmer. First, let's talk about this, and then we move towards what's happening in the Japan, and all of that triggered a lot of risk off globally. But how important is the data readings, and how do you see the rates narrative in US?
Yeah, hi Ajay. So I think we are at a very, very crucial point actually in global macros. And I think the fundamental question is whether US labor markets are at an inflection point where we will see a continued deterioration in US labor market or whether the July weakness was a blip in the trend. At this stage, we don't have enough data to, confidently say anything on either of the side. So our base case right now is that the U.S. the U.S. economy is going to slow closer to trend, and the economy is going to hold up. But I think the risks to the downside have clearly increased because we did see for the first time more firing in the US compared to the last 12 months where it was less hiring but not firing. So there is a change. It is a red flag. 1 month's data does not make a trend. So we are on alert and wait and sort of watching how things play out from here. The implications on monetary policy, though, are important. The US Fed has been a single inflation-focused central bank. It has now moved to its dual mandate, and the July jobs report confirms that shift is important and needed. We think the Fed is going to move 3 times this year in 25 basis point clips. So 25 basis point each in September, November, and December, and then deliver another 100 basis point in cuts in 2025. So we are not in the camp that the Fed needs to jump in immediately, do an intermeeting cut. So we think the Fed is going to see how things evolve before it moves forward. So net-net, some risk developing in terms of US economic outlook, so on alert for that, and the higher for longer view has changed.
Interesting. How does it really impact Asian currencies and also rate outlook? Say, example, for India, yesterday the governor was also sounding pretty cautious. In fact, people call it a very hawkish stance, on clearly focused on inflation management, and for a moment market also sold off a bit but came to grips later on. So how does that impact Asia and India?
Right. So as far as I think Asia and I would say even India is concerned, the shift in US monetary policy is important for the region. Some of the central banks here were constrained because of elevated Fed funds rate and the risk of stronger dollar. What we've seen in the last 1 week or so is most Asian currencies have actually held up reasonably well, despite the huge market moves we've seen triggered by both Japan and US. So the backdrop of lower global rates and currencies, local currencies that are holding up, at least from the central bank's perspective, actually lowers the global hurdle to cut rates. For India, our view is that the RBI policy is going to be driven more by domestic factors than what the Fed is doing per se. But if there are downside risks to US economic outlook, then that could potentially have spillovers to how global growth plays out in 2025. So we do think there are some downside risks that are building up over the medium term, although this is something we'll need to monitor more closely. For the RBI, more specifically, I think the concern has been on food inflation. Our view is high-frequency data actually show that food prices are already reversing in the month of August. So we think that the upward revision that the RBI has done to the July-September quarter on CPI from 3.8 to 4.4% is unlikely to materialize. We see downside risk to food inflation as well as to headline inflation. So in the combination of the lower inflation that we expect, plus the shift in global growth and monetary policy dynamics, we do think India's monetary policy is also at an inflection point. Our view is that the rate cuts in India are going to begin from October, which is much ahead of what the RBI is signaling right now.
Okay. One quick last word I want to understand on growth. The first time RBI governor has shared first quarter next year's growth estimate at 7.2%. This in light of fears that parts of the world are very slow, the data is very shifty, but it could cast a shadow on India growth. What are your thoughts? And because there were three back-to-back upgrades coming in as far as India growth estimates are concerned. Where do you stand on growth, and what are your thoughts on the recent developments' impact on growth?
So FY25, we are expecting GDP growth of around 6.9%. So that's slightly below the RBI's projection of 7.2. We think the RBI, surprisingly to us, did downward revise the Q1 FY25 growth number from 7.3 to 7.1. So that's the first time we've actually seen a downward revision in recent memory. And that reflects the weakness that's creeping in corporate profitability, slower government spending, some of the softness on infrastructure output growth. But I would say also some of the July numbers we've got on MHCV sales, passenger vehicle sales actually do show softer demand and inventory build up. So this does suggest to us that the FY25 growth should be slightly below 7%. So there could be further downside surprise relative to the RBI's projections. On the 1 year ahead projection, which is 7.2% for the April-June 2025 quarter, to be honest, I think, from a more medium-term perspective, India's potential growth is around 7%. So what those estimates suggest is that India should grow around potential. But when you are, around turning points on the business cycle, and that could be true globally, that could be true also in India, it becomes harder to have a confidence on, how 1 year ahead growth will play out. So if the US, for instance, does see a soft landing, then that could hold true. But if it does not, then there would be downside risk to this growth. So I think things are extremely fluid on the global front, and therefore the near-term economic developments are something that one has more confidence on. As things stand, we think risks to both growth and inflation are to the downside over the medium term.
All right, Sonal, thank you very much for your time and accommodating our request this afternoon and sharing your thoughts.
If you like this video, then like, share and subscribe to ET Now.